Welcome, ladies and gentlemen, to the first episode ever. Actually, it's the second episode because we started this a year ago, but we never followed through. So
are we even calling it the same thing?
I called it Valuation Nation, but if anyone else has a better name in the chat, we're open to suggestions. I'm here with my good friend, Mr. Steven Filario, Dividend Streams. And this is going to be a weekly podcast every Thursday, about 5 to 6 p.m. Let's call it that. Maybe 5:15 to 6:15 p.m. where we pick one stock a week and we deep dive into that stock. It doesn't always have to be a stock that's rather unknown. It could be like a Meta or an Amazon, but it's going to be a stock where for that hour you get a thesis around the stock, whether it's a bullish thesis, a bearish thesis, whatever it may be, and we go deep. We're going to be trying to do stocks that are not as well known, so there's new ideas, and hopefully this 1 hour serves as like a research type of podcast for people that want to get some new ideas. Steven, are you excited for this?
Yeah, I wish we may have to change the time.
Okay.
Have nothing prepared other than what I already know. So
that's okay. I mean, I'm sure the comments will help us come up with some more stuff. And obviously I have a bunch of questions, but what do you think about the concept of picking one stock a week? And
let's see how it goes. I mean, maybe we discuss different things. Let's see how long we talk about this specific company, and we'll see what happens.
Okay. So
this can be the beta test podcast.
Yeah, this can be, and if we get good feedback, obviously we'll keep it going. If not, then we'll adjust. But let us know how you guys think. Yeah. Another question I have for you is, are you being held against your will to do this podcast with me, or did you willingly want to do the podcast?
I'm being held against my will.
Okay, so you're lying right now.
100% I'm being held against my will.
Why are you being held against your will? This was your idea.
It was your idea. What are you talking about?
No, you're the one who called me up on Sunday. You're like, Amit, I think we need to start a podcast.
No, that is not what happened.
That is exactly what happened.
That is not what happened. I called you and I said, how on earth is this person generating this amount of revenue off of this, blah, 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 blah. That is what I said. Is that not what I said?
Yeah, and then right after that, you were like, by the way, I think
no, that was you. That was not me.
You had that thing that two guys that are just like drunk at a bar, and you're like, you know what? We just started a podcast. That's exactly what happened. And
that is not what happened. But all right, anyway.
What are we talking about today, Steven? What's the stock?
Oh, looks like I was a little bit early on this because Bank of America is now calling it a top pick in cybersecurity for them.
Really? Yeah. Okay. So the name of the stock we're talking about today is called Fortinet. Okay. Fortinet. So before we get into the actual stock, let's try to break it down by sector. It is a cybersecurity stock. Can you give me a high-level overview of why you even got interested to look into this and the kind of cybersecurity space that got you thinking about an investment thesis?
Yeah, so I am trying to figure out what is possibly going to do well this year other than income producing assets. I started a position today after I wrote the article. I am looking for things that can do well over the next couple of years.
Right.
And cybersecurity is something that I think is very interesting that people overlook. Dealing with the insurance side of this, what I can tell you that is my opinion based on what I know to be facts. Companies are spending more and more and more on cyber insurance every year. There are more and more cyber attacks every year. This is becoming a very big piece of a corporation's overall insurance packet. On the individual side, you have pretty much everybody uses some type of antivirus on their computer.
Norton was the big one in the.
Symantec's a huge one. There's some other pretty big ones. ESET. I don't know if McAfee's still big or not, but cybersecurity is huge. Phishing scams are huge. Identity theft is huge. Corporate break-ins is huge. Okay. So some of the stats that I looked at was in 2022, the FBI received more than 800,000 cybercrime related complaints with losses exceeding $10 billion.
Right.
The estimated cost of cybercrime globally in 2022 was just over $7 trillion with a T.
That the cost of companies that lost.
The cost of cybercrime globally. So I don't know what all the different baskets of what they are associating crime in. I am going to make an assumption that includes identity theft and everything else.
Right.
It's my assumption. I don't know, but that is the stat that I have.
Right.
Recently, you know that I really like Cisco. They made a deal with Splunk, which is another cybersecurity company, to acquire them at a $28 billion valuation.
Right. So in general, you're saying cybersecurity is becoming something that companies, governments, et cetera, it's not even a luxury anymore. It's like you can't have.
No, you have to have it. You have
and
to have
and that's because of rising bad actors. Is that the argument? That's just there's bad people in the world?
More companies have seen lockouts and demanded Bitcoin for the keys to the kingdom in 2023. That's a reoccurring theme. Identity theft, especially in healthcare, is a reoccurring theme because individual indicators that are found in healthcare records are typically highly targeted fields of information because those can be used to hack bank accounts, create identity theft, et cetera, et cetera.
Right.
Companies spend a lot of money on not just cyber insurance, but actual networking equipment and security monitoring. There's also a large amount of third-party firms that act as an intermediary. The industry is huge, and it's only going to get bigger from what I say. Now, I am going to share my screen. I'm going to show you a few things. And I'm going to go about this a little bit differently than you're used to. So, The estimated cost of cybercrime worldwide is expected to expand to almost $14 trillion.
Wow.
In 2028.
Wow.
Okay, so this was done in the middle of 2023, and they were estimating just over 8 trillion. Okay, so you're talking roughly 70% increase over the next 5 years.
Right.
This is a lot of money in cybercrime. So you got to believe companies are going to be spending a lot of money because it's not just if a lockout happens, business interruption occurs, a lot of bad things occur. Cybercrime is a horrible thing. And my premise is that all of this was happening pre-AI. I think cybercrime is going to get more sophisticated by utilizing AI. And I think the same type of defense is going to get more involved and better through AI. So I think there's going to be advances on both sides. And this is a big industry. Let's see. So Fortinet is recognized.
Fortnite? We're doing Fortnite? That's the
Fortinet. Yeah, it's pretty close, right? Is recognized in 9 of Gartner's market quadrants. These are the big ones. Now,
endpoint security, network firewall, access man. So these are kind of the core things Gartner, which is a research firm around these tech companies, kind of looks at when it comes to cybersecurity.
Correct. And let me see. All right. So the total addressable market for Fortinet is growing from 125 billion to 199 billion by 2027. Like there is substantial growth for them on the horizon in their total addressable market.
That's a 12% CAGR in the next 5 years.
They do secure networking, security operations, and universal SACE, which is hardware components. Now, I'm going to show you something, and we're going to look at this a bit differently.
Okay.
So let's see if you can figure out why I like this. This is the income statement, and I use Seeking Alpha because forget that I contribute to their articles. I think that they have the best research for what I am looking for on a very quick basis. So look at their revenue increase every year.
We're at, what are we? We're at December 2013. We did 615 million in total revenue, right?
And a decade later, we're at 5.2 billion on the TTM.
Huh. That's not bad.
Big growth, and just year-over-year growth. We don't have Q4 yet, but in the TTM versus last year, you're talking about $700 million year-over-year revenue growth. High margin business, 3.95 billion in gross profit.
Damn. 5 billion in revenue, 3.9 billion in gross profits.
I don't want to give a bad number from my head, so hold on. So that is a gross profit margin of
60%? Has to be above 60, I think.
76.5%.
Yeah.
High margin business. So now their cost of revenue, not much. So we start looking at their actual running the business and operating expenses. They're left with 1.2 billion in operating income. On an absolute bottom line in the TTM, they've generated 1.15 billion in pure profit. So This is a highly profitable company with their bottom line profit over 20%, 22%. Margins are great, numbers are great, growth is there. Let's look at their balance sheet. What are these numbers right here, Matt?
Cash and cash equivalents, they got 2 billion in cash, 982 million short-term investments, 3.16 billion in total cash and short-term investments.
A lot of cash on hand, right?
A lot of cash, yeah.
Okay. So now we start going down to their liabilities. Long-term debt, what does this say?
$1 billion bucks, basically.
Basically $1 billion. How much cash did we have?
3.1 billion.
3.17. Or yeah, 3.17. So not levered, got more than enough cash to pay off all the debt today. Very interesting. So now buybacks, shares outstanding. In 2019, 863 million shares on their filing date, down to 767. They've been buying back shares every year for the past 4 years.
They've been buying back how much per every year?
So they've bought back, what is that?
862, almost what, 20 million shares a year? A little bit more than that, I think.
They've bought back roughly 11% of their total shares outstanding in the past 4 years.
Wow.
All right.
That's a hell of a thing for a tech company to do. That's not easy.
Yeah. So hell of a thing for a tech company to do. Then we want growth, because this is to me, this is a growth company. This is not a dividend company. This is a growth company. So let's look what the analysts are projecting. Pretty big free growth forward, right?
Right. EPS estimate 156, 30%. So it's growing at above 30% year over year.
I mean, you got significant growth, double-digit growth every year going forward, and this year is just under 10%. We'll see if that changes, but I gotta think that it's going to be different, considering all these other years are much higher. So, and that could change after Q4's reporting. So we'll see. And then revenue. This is what the analysts are projecting. I mean, that 28 analysts are projecting that in 2025 they're going to be close to 7 billion in revenue, and that they're going to finish this year with 5.3 billion. So think about that. You're going to grow 13% in 2024 and another 16% in 2025, and think about how high of a margin business this is. So I get very excited when I see this. So then I start looking at the numbers, and I'm going to show you a quick graph that I put together. It's in the article. So that pretty much sums up their income statement over the past decade. Growth across the board.
Right. I mean, look, it's very exciting. I guess one of the questions I have. Well, yeah, can we talk about free cash flow? Because I know you like those.
So we're going there right now.
Yeah, let's do that.
We are going there right now. So that is the metric I love. Now,
can you explain why you like that metric again?
It's very hard to manipulate it, cash in versus cash out. Whereas net income, you never know what they're depreciating against it, income tax rates, et cetera, et cetera. Both are profit lines, but free cash flow is a more accurate measure of the cash left over, in my opinion, and what I like to go for. Share my screen. So I put together some valuations. This is up to date. Let me expand it. All right. So these are the top 10 in the sector. You got Cloudflare, which I owned and sold and made substantial gain on.
How much money did you make?
It was a 4 or 5 bagger.
So you took $1 and made $4 off.
My buddy told me to buy it at 33. I had never heard the company, but he is a tech guy. He said, "Trust me." I said, "Okay."
You just blindly trusted him.
I blindly trusted him. I didn't look at anything. I just bought it. And I sold half of it at, I'd have to look, half of it like 165, the other half at like 185, something like that. I think my average sale was somewhere in the mid 170s. So it was during the 2021 bubble. I got lucky on this. This was not my idea. I got lucky. So CrowdStrike is in here, Splunk and Palo Alto networks. So you look at this, Fortinet is generating 2.06 billion in free cash flow. They're trading at basically 22 times their free cash flow. When you look at these other companies, they look significantly undervalued.
Yeah, then this goes to June's comment right now. What distinguishes them from the competitors? I think that's what your point is, that their free cash flow multiple is significantly lower than like a CrowdStrike.
And look, I'm not a tech guy that can tell you Palo Alto is better than Fortinet. Fortinet is better than Palo Alto. I can't tell you any of that. What I can tell you is that the customer base seems to like the product. The analysts seem to think the company is going to continue to grow. And right now, they are generating the second most amount of free cash flow from the top 10 in their industry. And Palo Alto, which generates 2.92 billion in free cash flow, trades at basically 31 times their free cash flow, when Fortinet is trading at 22 times. And they're the only two that are generating over 2 billion. CrowdStrike is generating 1.09 billion in cash from operations and just under $1 billion in free cash flow. Yet they have a multiple of 64 times, 65 times.
Why do you think that's? Do you think people just like the product more?
I have no idea. I couldn't even begin to tell you. I have no idea. I haven't looked into it. So now here's the other thing. Splunk has a market cap of $25.5 billion. Cisco is acquiring them. It is projected to finalize sometime, I think Q2, Q3 for $28 billion. Okay. So a company is worth what somebody's willing to pay for it. And Cisco is willing to pay $28 billion for Splunk. Now, Cisco is saying we are willing to pay right now, based on the current 12 months of $850 million in free cash flow, we're willing to pay 33 times that free cash flow. Yet Fortinet is trading at 22 times.
And Splunk was also cybersecurity, correct?
They're cybersecurity. Yeah.
Right.
So where does this make sense? That you have Cisco Systems paying for Splunk at 28 billion market cap at 33 times free cash flow. To me, that means that Fortinet is grossly undervalued.
Now, could there be a product problem that is the reason for this, or?
Absolutely. Absolutely. Definitely could be. But I would argue that if there was, they would not have gone to this big, and they wouldn't be generating the second most free cash flow, and they wouldn't be growing at the rate that they're growing if customers were unsatisfied because there are so many other options in the sector.
Right.
Now, when I look at earnings growth, Fortinet has 30% earnings growth over the next 2 years. You're paying 35 times 2024 earnings and 29 times 2025 earnings. Not crazy, considering CrowdStrike is trading at 66 times and 52 times, and Palo Alto is trading at 44 times and 36 times.
Right.
So from a valuation standpoint, this makes a lot of sense. And I would go back to this chart and say, well, I'm not a tech person. I would seriously look at how much their revenue and profitability has grown year over year. This is not a flash in the pan. This is year over year growth. So if there were product problems or there were software problems or they were losing customers, they wouldn't be growing like this. And I can read all the stuff that I can read, and I'm not going to truly understand this sector. So I need to look at the profitability and see how customers are voting with their dollars.
Now, one of the things about tech companies that I think are incredibly interesting is that they have fixed costs. And so those fixed costs allow them to have broader operating income or operating margins to have better operating income. Fortinet is up about 300% in the past 5 years. Your argument is that it's still undervalued given that the market is CAGRing overall TAM for cybersecurity, and their price to free cash flow is lower than significantly from industry peers, which is why even though it's up 3x in the past 5 years, there's room for it to grow.
Yeah, I mean, look, cybersecurity has been a hot area, and you have a lot of interest in this area. You have a lot of total addressable market that's going to continue to come in. Companies are going to be spending more money on it. Fortinet was up to about 85 or so a share. It's significantly off its lows. And, it's something that I think is interesting because it's an expanding market. And with Cisco continuing to add to their repertoire and them acquiring Splunk, that could be the beginning of more consolidation. I mean, there's so many of these companies out here. Who's to say that Intel doesn't acquire somebody or Microsoft doesn't acquire somebody or Amazon or any of these other companies? Arista Networks, they are becoming a very big competitor to Cisco. There could be a lot of consolidation. And when you look at what Cisco is willing to pay for Splunk, and you look at the growth that's on the horizon for Fortinet, to me, this makes sense. I mean, look, I started a starter position. I said to myself, I would like to get to a certain amount of shares, which will remain undisclosed. And I am probably going to add to it every 2 or 4 weeks until I get to that position because I cannot time markets. And I'm willing to pay a little bit higher for this. Maybe I buy shares in the 60s. Maybe I buy them lower than I did today. We'll see. But I think over time, look, I got time on my side. Like I can wait this out 3 or 4 years. But overall, I think it makes sense. And if you look at what Bank of America said,
Real quick, Bruno says, from my research, CrowdStrike excels at one area in cybersecurity. Cybersecurity is huge, and there could be a lot of products that are good. Yeah, and I mean, if there's other areas to cybersecurity in terms of subdivisions, that's where a company like Fortinet can potentially do maybe even a little better than cybersecurity in different niches. Kevin says the company is trading fair and the others are overvalued. Morningstar is great for checking that as well.
So let's look at the headlines. So this morning, Bank of
America said that's their top pick or one of their top picks.
Listed as a top pick for cybersecurity in 2024.
Huh.
Morgan Stanley has them top stocks with high free cash flow and EPS growth. Susquehanna, I probably butchered that, has it in their list for cybersecurity companies set for a strong 2024. I mean, Goldman Sachs has it as laggards that could bounce in 2024. I mean, people are taking notice about this, and it's not just me. It doesn't seem like it's just me that sees a possible opportunity here.
Their return on invested capital, thank you for Sebastian, this is one of his top picks, is about 22.8%. 22% annualized for September 2023. Is that something you look at, ROIC, at all when you look at a stock?
I do. I did not look at it on this because that's normally a secondary. When I see growth like this, I don't necessarily go to the ROIC for the simple fact that they're getting a very good return on their money and they are generating more profitability and they're buying back shares.
When would you want to look at ROIC as a?
I mean, you should always look at it.
Why?
You just should, because knowing where a company gets the best return on their money is very important. If a company has a high return on invested capital, you want them investing in the business because they're going to make more money in the future.
Right. Okay, so let's talk about the bear case.
I mean, the bear case is pretty simple. That one of their very large clients gets hit, their products don't work, and it becomes public and they lose customers. That is a risk for not just them, but everybody in the space.
Yeah, I mean, that could inevitably happen to anybody, though, right? Like, there's a leak, one of their products doesn't work. I mean, if you're a cybersecurity company, your product doesn't work, and then the clients you're serving,
you're done.
Yeah, it's not necessarily going to be the best. But that bear case applies to a lot of the other cybersecurity companies, so it wouldn't be just a Fortinet.
And look, something that would be specific to them would probably be more along the lines of their top competitors advance so much quicker than them and make such a better product, they steal customers away and it destroys their growth story. But that can happen in any industry. And so far, we haven't seen that. And quite honestly, I'm not in the industry. I would have no way of knowing what product is better other than what I read. And in their investor relations, I'll share it. I just want to get to the slide. When you look at the Gartner stuff, I got to trust the analyst firms to actually look at this and put everything together. And they're saying that Fortinet is right up there. So I got to go with what the analyst firms say.
I'm looking at LinkedIn right now. These guys have 12,000 employees. So this is not a small company by any sense of the imagination. I mean,
no, so I have their investor relations open right now. So all the big players follow them.
Right.
So I had this slide in my article that they're a leader with Checkpoint and Palo Alto in network firewalls. They recognize the leader in that. They recognize the leader in SD-WAN. They're a challenger in single vendor SaaS, or SaaS, because it's not necessarily the same pronunciation as SaaS, but enterprise firewalls, they're a leader. I mean, like I said, I don't know what product is better, but you got to go by what the analysts are saying.
Yeah, the other thing that's really interesting to me about a lot of these cybersecurity plays is that, again, as we talked about in the beginning of the podcast, if the world, I mean, it's kind of like a little bit of a Palantir thesis. If the world's getting a little bit more fractured and there's going to be attacks from different nation states, much less, bad actors, that is something to think of. Have you thought at all about the idea of geopolitical stuff, like a Russia trying to hack somebody, and that's where they come into as well?
I mean, not necessarily a specific country, just overall, because I deal with this.
Right. What do you mean you deal with this? You're a hacker?
No.
So what do you mean you deal with this?
On the insurance side. Like, I understand.
You hack insurance?
No, dude. I understand the insurance industry on the cybersecurity side of things, and I pay attention to what's going on. And the amount of money that cyber insurance costs and how much it's gone up in the past couple of years, and the additional attacks on a year-over-year basis, companies are spending more money on security.
Right.
So this is an industry that I do believe is going to continue to grow, and the estimates may not even be enough. Remember, they're just estimates. Cybercrime continues to go up. It's a very interesting sector. And it could be a tech sector that gets pretty hot because we could see a rotation out of the Magnificent Seven. If we do, cybersecurity could catch a bid. Why not?
Do you
Where else
think
is the hot growth? I don't know.
do you think there's a better risk to reward on these guys than Mag 7? Just given how much Max, I mean, but this guy's run up a lot as well. It's not like this guy Fortinet hasn't run, right?
I mean, you got to remember, I own pretty much all the Mag 7 except for Microsoft and NVIDIA. So I'm pretty bullish on the Mag 7.
Okay, one share of Tesla is not owning the Mag 7.
Significantly
Okay.
more than that.
One share of Tesla, 10 shares of Tesla is a 10x from what I said, but still.
So
Okay.
it's hard to go against anybody in the Mag 7. I mean, look, we're going into an election year. Where are you going to advertise for the election?
Yeah.
Call it Alphabet and Meta, the duopoly for advertising. You're not advertising anywhere else. I mean, you are, but not the majority of your advertising dollars. It's going to their platforms. Sure, Prime will pick up some and some of these other companies, but the majority of the spend is probably going to be there because that's where the eyeballs are.
Right.
So I don't think that you can really write them off. I think Amazon's going to have a very good year. I mean, we'll see. It's hard to, they've run up a lot. And I said this to you before. I think there's going to be more of a broad market rally this year as I think capital is going to come in to income producing assets. And I think the Coca-Colas of the world, Procter & Gamble's of the world, there's a lot of opportunities, Verizon, Altria Group, because I think people are going to look to recreate the yields that they were used to getting risk-free.
Right.
The Fed's got to cut rates first before that really plays out. And I couldn't tell you when they're going to cut rates.
Hey, does Fortinet benefit from rate cuts?
Yeah, probably.
I mean, they don't have that much debt, but in general, you're saying
Of course, the capital coming down means businesses are going to spend more, and if businesses are expanding. So, how much do you know about just network infrastructure at a company?
Not as much as I think I should know.
Okay, so I'm going to give you just a very high level overview.
Okay.
Let's say you have a 100-person office.
Okay.
And you are not a work from home company. You're in the office, you have a hybrid schedule, and you need 100 workstations.
Right.
You need several 28-port switches or several 48-port switches, or however you want to deviate them. You need servers. You need firewalls. You need Cat5 or Cat6 cable. You need drive.
Wait, you need cats, you said?
Cat5 or Cat6 cable, depending on what you want to run. You need SD-WAN. You need a lot of components for your internal network infrastructure.
Okay.
You also need cybersecurity. There's a lot of upgrade cycles that are going to be coming because from what I've seen, companies, I wish there was an IT person that we could discuss this with, but because from what I've seen is just what I've seen. It's not industry standard, but companies tend to switch firewalls out quicker than switches, and switches probably every 5 to 7 years. I mean, there's always an upgrade cycle for equipment, and then the way that these companies operate is they have reoccurring revenue services that go along with the products. It's not like you just buy a firewall and you buy a switch and you're done. There is monthly fees for monitoring, security, and everything else. Like it's an ongoing expense.
Right.
So I think it's a sector that can expand because as cost of capital comes down with the Fed cutting rates eventually, businesses are likely to expand, and that could mean the need for more equipment. Need for more equipment means need for more cybersecurity services.
Is there any concern of work from home potentially leading to the decline of demand for all this network infrastructure that's required?
I think we're past that.
I think we're past it too, yeah. It seemed like a concern last year, but now it's like not.
I think that you're going to see a hybrid work schedule. I think that it's going to be more or less, depending on what industry you're in. I mean, obviously, if you are a nurse on call or a doctor on call, you're not doing that from home. But I think back office services is something where you'll have a hybrid work schedule, because the companies that don't have a hybrid work schedule will probably lose good people to other opportunities that have a flexible work schedule. So I think hybrid's going to be the norm going forward, whether it's 3 or 4 days a week in the office, who knows?
Right. This is incredibly interesting. Now, the question here is, how big of a position do you want this to be? Like, I mean, do you want this to be a substantial part, or it's kind of just like a bet on cybersecurity and it's...
What's your definition of substantial?
I mean, would this even
percentage-wise? What's your definition?
Get close to 5% of the portfolio, or
hell no?
That's what I was about it. Yeah.
Okay. No. I mean, look, it could be for some people, but I'm unique. I'm very diversified. So for something to become a 5% position, I got to really believe in it, because when you talk about portfolio and the way that I have it constructed, I have all different baskets, from ETFs to closed-end funds to income-producing assets to big tech to growth. So,
what is a stock that is at least 5% of your portfolio? To give an example of something you actually believe in, I would imagine like a SoFi, right?
Meta.
Okay. I just deleted Instagram off my phone today, by the way. So,
okay.
They lost the user.
I can no longer be friends with you.
Dude, it's just ridiculous. It just, like, it's stupid going through the reels. It's like, it's just, you're just killing your brain cells. I mean, it is what it is. You know?
More than a third of the global population uses their...
They can keep using it. I'm just saying, I'm not going to let them keep... It's not really their fault. I'm just saying, you know, I don't want to waste my time.
Yeah.
So. Okay, cool. So I think that that about does it. Please give us comments in the chat on other stocks that we can look into. Celsius is on our list. We'll do Verizon for Chris. Chris is gonna have to join us on that one, and we'll get the... You saw they got upgraded today to $46 by Wolf Research, so they got a nice upgrade today.
Oh, you mean somebody has a brain?
Dude, I remember I was in New York City. You called me the day the lead cable Wall Street Journal piece came out. And you were like, this is so fucking stupid. We need to buy Verizon. I remember this happened. And then obviously Chris has been
yelling. So dumb. It was so dumb.
It was pretty dumb.
Look,
we got Celsius, we got Verizon, we got Hershey's, we've got
don't sleep on AT&T. This could be their year.
Let's do AT&T. Let's try it.
This could be their year. They got momentum going into Q1 for like the first time in God knows how long.
Yeah, and this pod is not necessarily always bullish. We can, like, a Walgreens. We should do a Walgreens deep dive. I mean, there's something to discuss there in terms of maybe there's a bearish case, right? So,
yeah, today was not fun with Walgreens.
Do you own Walgreens?
I do.
Yeah, it was not fun.
Not a lot by any means. Like the joke you made about Tesla, that's how many shares I have of Walgreens in my dividend. It's not a real position. It's a position in a 92 position portfolio for a series I write on Seeking Alpha about dividends. And yeah, they cut the dividend by almost half today. Fun times. Company that's raised the dividend for 48 years.
Correct. Okay. So yeah, we have a lot of stocks. Enovix, we can do some of that. Starbucks, Enphase, DNA. I know a lot about DNA. I can kind of work with that one. I can carry that one. Datadog, DraftKings. There's basically 52 stocks a year. We get to do this. And yeah, goal is just to do a super big deep dive on one stock every single week and like take a look at the bear and bull case. HIMS, 3M, Affirm. Kelly also is bag holding a bit of Walgreens with you, Steve. So yeah.
So tough.
It was tough. But we'll talk about why you bought it in the first place, right? There might still be a thesis there.
So I'm in the same position I was in with Intel. And I said in an article that I was exiting my position in my dividend harvesting portfolio that I write because Intel at 1% no longer fits my need in that. But I did believe that if you held it, you would do well because it's Intel and they have people don't necessarily understand that there are two companies that make x86 chips, AMD and Intel. That's it. And Intel has a very dominant position in that, and you're going into an upgrade cycle of computers. They're fine. The chip manufacturing plants that are going to come online the next couple of years. The long-term story about Intel is fine, but for me, it didn't fit the narrative of the portfolio that I've been writing.
Intel is one we got to do. There's just so many, I think, every week. And the goal is to really, and now that we got the first episode out of the way, they'll get better as we have more time to prepare and get all this stuff in place. And it'll be good. I think it'll be a fun podcast every week. All right. That's it for us, folks. Thank you for being here. We got one more stream left of the day on my channel, Pouncer Deep Dives at 8:15ish on my channel. And then we'll have Finance Junkies at 9 p.m. And then we can take our asses to sleep and wake up in the morning and do it all over again because the market will be open tomorrow on Friday. That's it. Thank you all for being here, and we'll see you next Thursday around 5 p.m. on the stream. Bye, everyone. Have a good one.
Later.